A lot of people think of an LLC as just a legal requirement, right? It's a box you have to check when you start a business. But what if I told you it's so much more than that? Today, we're going to dig into how that simple document, the limited liability company, can be transformed into a seriously powerful strategic tool for protecting your assets and, maybe even more importantly, optimizing your finances.
So that's really the central question, isn't it? Is your business structure just a piece of paper sitting in a file cabinet, or is it an active living tool that's working for you every single day? Believe me, the answer to that question could mean a difference of thousands or even millions of dollars over the long haul. Let's find out how.
Okay, first things first. Let's talk about the foundational layer. This is the #1 reason most people even form an LLC to begin with: liability protection. Think of it as the shield that stands between the risks of your business and your personal life.
And this right here, it just lays it out so clearly. If you're a sole proprietor, you and your business are legally the exact same thing. So if the business gets sued, your personal assets, I mean everything, your house, your car, your savings, it's all on the table. But an LLC, that creates a totally separate legal entity. That separation, what lawyers call the corporate veil, is what shields your personal life from business debts and lawsuits. And that legal difference right there is the crucial first step. But, and this is a really big but, that shield isn't bulletproof. A court can actually decide to ignore the LLC's separate status. It's a process called piercing the corporate veil. And if that happens, bam, that protective barrier vanishes into thin air, and all of a sudden your personal assets are completely exposed all over again. So how does this shield actually break? Well, it almost always comes down to simple mistakes by the owner. The most common one by far is commingling funds, using your business account to pay for personal groceries. Another big one is just ignoring the formalities, like not having a proper operating agreement. And a huge error is not using the business's unique employer identification number, or EIN, for all its banking. These might seem like small things, but they are absolutely critical errors you have to avoid.
All right, so that's the defensive side. But beyond just protecting yourself, an LLC can become this incredible engine for tax optimization. This is where we shift from playing defense to playing offense with our finances, actively using the structure to lower your tax bill.
Okay, one of the most powerful strategies around is electing to have your LLC taxed as an S-corporation. So here's how it works. Instead of having all your profit get hit with a massive 15.3% self-employment tax, you pay yourself a reasonable salary. Only that salary gets hit with payroll taxes. And the rest of the profit, you can take that as a distribution. And get this, those distributions are not subject to that 15.3% tax. That's huge.
Let's put some real numbers to this so you can see the impact. Say your business makes $100,000 in profit. With a standard LLC, you could be looking at over $14,000 in self-employment taxes. But with that S-Corp election and a reasonable salary of, let's say, $30,000, that tax bill drops to under $5,000. We're talking about a potential savings of nearly $10,000 back in your pocket in a single year, just from making one strategic choice.
So you might be asking, when does this actually make sense for me? Well, the general rule of thumb from experts is that the tipping point is right around $50,000 in annual net profit. If you're below that, the extra administrative costs might not be worth it. But once you start clearing that $50,000 mark, the tax savings are often just too big to ignore.
All right, now we're gonna level up. We're moving from a simple shield to building a full-on asset protection fortress. This is where we get into some really sophisticated strategy, using multiple LLCs, not just to shield your personal life, but to actually insulate your business assets from each other.
The core idea here, the secret sauce, is segmentation. Think of it like this. Instead of putting all your eggs in one basket, like having all your rental properties under a single LLC, where one lawsuit can threaten the whole portfolio, you break them up. You put each one into its own separate, distinct legal entity. So a really common and really smart way to set this up is using a parent holding company,
that owns several subsidiary LLCs. Each one of those subsidiaries holds just a single asset, like one rental property. Now think about it. If someone slips and falls at property A and decides to sue, that lawsuit is trapped inside the property A LLC. It's completely firewalled off. It can't touch property B, and it certainly can't touch the parent company.
Now, what makes this whole fortress idea basically impenetrable is a powerful legal concept called charging order protection. In states with strong laws on this, like Wyoming, a creditor who wins a lawsuit against you can't just come in and seize the LLC's assets. They can't take over the company. The only thing they can do is get a charging order. That means they just have to sit and wait for you to decide to pay out a distribution, and you know what? You might just decide not to make any for a very, very long time. It gives you incredible leverage.
And that is exactly why so many savvy investors set up their parent holding company in a state like Wyoming. They have some of the most ironclad charging order protections in the entire country, 0 state income tax, and you can have owner anonymity, so your name isn't all over public records. These features make it the perfect strategic command center for a well-built asset fortress.
Okay, so let's bring this all together. The biggest thing I want you to walk away with is this. It's a total mindset shift. An LLC isn't just a legal entity that you form and then forget about. It's a dynamic, strategic tool that you need to actively manage and use to your advantage.
There's this great quote from an expert analysis that just nails it. The tax code rewards structure, rewards strategy, it rewards documentation. It's so true. The legal and financial systems we all operate in are built to benefit the people who are organized, who are strategic. The easy way might feel good at first, but it often leaves you totally exposed when things go wrong.
Which brings us to the final and maybe most important question you need to ask yourself. Is your business structure actively working for you, or are you just working in it, missing out on all the protection and all the efficiency it was designed to give you? Really taking the time to answer that could be the most valuable business decision you make all year.